As you can see, there's a lot of us up here on the stage. We're really going to try and do this not as a one-way panel, but rather to have a dialogue. And if you'd like to be part of that dialogue, then I would ask you to give us a question as part of the app that hopefully you have access to from Pigeonhole. So without further ado, just a very quick round of introductions to the people joining me here on the stage. We have Ambareen Musa. Ambareen is the founder and chief executive officer of Sukamal, a Dubai-based fintech focusing on financial inclusion. She's been recognized globally as a successful entrepreneur and regionally as a key player in this stage. Dino, following a career in investment banking, Dino is now the co-founder and CEO of AwanTunai, an Indonesian fintech company. And sitting next to me is Maree. Maree is co-founder of Making Everything Achievable. Kaye has spent her career innovating to put Indigenous culture and core values at the heart of what she does. And I'll let her explain a little later a little bit more about herself and her company. And we have Tamara, who is Chief Executive Officer, Financial Sector Deepening in Kenya, an independent trust focused on using finance to create value for low-income households and enterprises. Tamara brings deep expertise in the area of social change and financial inclusion, including a stint at the Bill and Melinda Gates Foundation, managing a global portfolio of loans. Joining us from business, we have Michael Eksteen, Vice President Digital at Chubb. Mike is passionate about providing scalable access to financial, educational, health and wellness services in emerging economies. We have Neelam, who after a distinguished career as an industry leader for some of the biggest tech firms globally in India, is now a board member for multiple companies, including the India bank ICICI. We have Parry, who after a career as an award-winning journalist now runs Bloomberg's Media's international operations. That includes Bloomberg Television, digital properties, live events, magazines, licensing partnerships, and syndication. We have Roland, who's joining us as the Group Chief Technology Innovation Officer from AXA, or AXA, one of the world's largest insurers. Roland has an incredibly diverse background spanning natural sciences, computer science, statistics, sociology, and business administration, which enables him to bring a very different perspective to the conversation around technology. And we have Deepak, who is the Chief Digital Officer of Kotak Mahindra Bank, where he's responsible for digital transformation, business model innovation, and future-ready initiatives of the bank, some of which he will share with us today. And then finally, we have Rasha. Rasha's worked in pretty much every part of the financial services in Egypt and is currently the assistant sub-governor of the Central Bank of Egypt, where she's responsible for creating and driving the strategy around fintech and how to enable that through implementation. So perhaps just a quick round of applause to join all of our participants here up on the stage. So to kick it off, I thought maybe we could have some of the entrepreneurs just share a little bit about the very unique way that they are approaching the problem of financial inclusion. So maybe Ambareen, to start, you could talk about how Sukamal is using education as a way to drive financial inclusion.
Is this what, can we hear? Yeah. So Sukamal is the largest financial services aggregator in the Middle East, and we're present in Saudi Arabia, the UAE, and Bahrain. So the core of the business, which started around 7 years ago, was around financial education. And when I say financial education, is what we realized very quickly is the transient population out of the Middle East is quite high, and the difference in the banking systems was quite heavy as well. And so what we found was the education of even understanding what an APR was and when do you use credit card and debit card. You'll be surprised that in Saudi Arabia, a lot of people use their credit card to take cash out of the ATM machine. So we found out that there was a huge gap into the understanding of financial products, let alone the unbanked to start with. So we've actually launched a whole initiative of financial education throughout the region, and we now also run the financial education of Saudi Arabia for the central bank. We've got a proposal with the Central Bank of Bahrain, and we've also approached the Central Bank of Kenya to try and replicate the success we've had into Saudi Arabia into the different parts of the region as well.
Fabulous, thank you. Maybe Kaye, you could go next. I would love if you could share a little bit more about your background, but also the very unique way that you're approaching the problem of financial inclusion, thinking about Indigenous culture and core values as really part of the solution versus a problem that needs to be solved.
Kia ora tātou. Tūtahi he mihi tēnei kia koutou. Thank you very much to the team here for enabling me to come all the way from Aotearoa, New Zealand. We are on the bottom of the world, but we punch well above our weight as a nation, which I'm really proud of. I'm Indigenous Māori, and we're a colonised country of the British as well. So we've had a rather tumultuous history as a tribal peoples. And so with that backdrop, one of the key areas that I've been involved in supporting Indigenous women into entrepreneurship and business has been the rediscovery of our culture. And in particular, how did we trade and work with each other as collectives pre-colonisation? What did that look like? What were our beliefs and our ways of operating and our values? And we start there. And from that point, we start to uncover what is our money story. And our money stories are very unique and different, but they have been very much influenced by a series of quite significant events. One, of course, the arrival of the British colony to New Zealand. Two, the usurping of our authority as an Indigenous population. Thirdly, the impact of war inside our nation, and then also mass urbanisation, as well as the impact of World War I and World War II. And so as a result of that, we lost a great deal of leadership. And so in our programs, we're looking at how do our money stories, our beliefs around money, and our practices around that, how have those things been influenced by our history? And also remembering that the narrative that we've been handed meant that we only saw ourselves a certain way. And so part and parcel of our education work in New Zealand has been about rediscovering the greatness that comes with our abilities to work and operate as a collective, as Indigenous peoples, and then also as tribal nations. How does that also enable us to think quite carefully about our financial futures, no longer as users of services, but actual owners and developers of our own solutions in Aotearoa, New Zealand?
Thank you. Maybe switching gears a little bit and switching continents, moving over to Indonesia. Dino, would love to hear a little bit about AwanTunai and how it's focusing really on SMEs and why you chose to focus on that as your target audience.
Sure. Well, AwanTunai is a supply chain financing provider. And, our approach to financial inclusion was to tackle both the unbanked, people with no bank accounts, but also those who are undigitized, people with very minimal digital footprint, which leaves them out of this new FinTech economy. So what we did was we essentially work with traditional suppliers, distributors, wholesalers within the Indonesian supply chain, and we're digitizing a lot of their offline transaction records. What does that mean? It means boxes and boxes of invoices at these wholesalers, which we're scanning one by one using AI OCR technology. We link these transaction records to actual individual merchants, building up a very deep transactional history on these merchants. So what was previously invisible, unbanked, and merchants that weren't able to be serviced by any kind of technology, now they're very visible with highly predictive data to determine their business performance. And we have also chosen this supply chain because there's a lot of upstream and downstream positive effects. To give you an example, we have an egg wholesaler, right? We've provided their merchant customers with financing. Now, by being able to receive cash up front from AwanTunai, the wholesaler now can bypass a lot of these egregious middlemen that used to charge very high interest rates to egg farmers. And so these egg farmers are able to receive cash from a more healthy source, the wholesaler themselves, versus usurious middlemen that charge 20, 30% interest per month. So, we're very excited that we're having this upstream effect. There's no way that we would be able to go to individual egg farmers in Indonesia, but by providing our lending service through a wholesaler who already has this supply chain network, we're seeing this upstream multiplier effect just by starting with a small enterprise. So that's our particular innovation.
Great story, thank you. And finally, Tamara, just to kind of finish off this initial sharing, maybe talk a little bit about FSD Kenya and in particular, the approach that you've taken focusing on three core pillars around cost, use, and trust.
Great. So I think in Kenya, we have a very vibrant and innovative financial sector. And many of you, I'm sure, have heard of the mobile money platform M-Pesa, which we're, I think, a little bit famous for. And if I reflect on what made M-Pesa successful, at the core of it was trust. People trusted that if they used this thing on their phone and it went to someone far away, it worked. And people would test it. And by testing it, they realized it worked, and that generated trust. Affordability is clearly important, because if I trust it, but it's too expensive for me, I'm not going to use it. And what we've seen in Kenya is that financial inclusion in Kenya has tripled. We're now at 83% of formal financial inclusion, largely driven by digital channels and digital innovation. But what we're seeing a lack of is the usefulness of that finance. It's good for a very small number of things, and there are innovations that are happening, but what we'd love to see is that people are able to use finance in ways that are more useful for them, to help them manage day-to-day, deal with risks, and especially to invest in the future. It's not good enough just to get by.
Thank you very much for sharing that. Okay, so maybe shifting gears a little bit, I'd like to move over to Rasha, who's really representing governments here today. So Rasha, I'd love to hear your perspective a bit on what the role of government is in driving financial inclusion, and maybe touch a bit on what you've been doing in Egypt with the central bank.
Okay, thank you, Anika. And I think I just want to shed the light and give a glimpse on Egypt first. It's a population of 100 million. We have a high percentage of youth, which is almost 42% from the age of 16 to 39. Half of them are women. And 33% to financial inclusion, and almost 100% of the population have mobile subscribers, with almost 50% with smartphone penetration. Also, 99% of our ventures are actually MSMEs. So all of these factors, like a few years back, the Central Bank of Egypt has taken the steps to modernize the financial sector and to endorse the financial inclusion and to transform the economy into transform Egypt into a digital economy. So we come up with the initiative of Less Cash initiative. And to bring this initiative on the ground, we knew that it only be done through an integrated nationwide efforts and collaborations. And this was the establishment of the National Payments Council in February 2017. And it's headed by the President of Egypt himself. And this is reflecting actually the state's commitments toward the desired transformation. So basically, the experts on the National Payment Council, including ministry, central bank, and government, they all came up with, developed a methodology of actions with integrated efforts towards less cash transformation framework, including the digitization of the government and a lot of initiatives. But I want to talk about the very important pillar, which is the FinTech and innovation. So Central Bank of Egypt have released in March 2019, this year, the National Strategy for FinTech and Innovation, basically with the aspiration to become the flagship for financial inclusion, SME financing, and cross-border activities. Basically, and this is what is good about the strategy, that it's not only bringing the national vision of 2030 of Egypt with the central bank vision, but it also includes the aspiration of the market. So the baseline assessment of the strategy was based on market assessment of consumer research and what the market needs and the demand. And it has 5 main pillars, including the demand, regulation, governance, fund and talent. But for also those pillars to thrive, it has to have a collaboration, not only on the government side, but also on the private side. And this is where the Central Bank of Egypt has taken a decision of we're not going only to work as just merely a regulator, so we've decided to be the catalyst for change, or enabling the market in doing more digital solutions in the market to enable more the unbanked and the underserved to become more included into the financial sector. So, and this is why we've done like a number of collaborations. I'll just shed the light on very important, like the central bank have decided to allocate 1 billion Egyptian pounds as a fund for the startups at the early stage. And this is done through a private platform as a fund of fund with a collaboration of the private sectors and private investors. Number 2 is the FinTech fund. The Central Bank of Egypt has dedicated this historical building, very centrally located downtown in Cairo, for the FinTech hub, where we can do all the matchmaking of the FinTech and growing the ecosystem. And then it's a private, it's a JV with the private sector just to keep it running and to manage it. So basically, a lot of initiatives have been done, like we're just as a regulator enabling the market and just give it a push for the rest of the market to collaborate and then make it sustainable and growing the whole ecosystem. Thank you.
Yeah, no, thank you. Neelam.
So let me add a different dimension to the role which government can, maybe I'll use another one. So let me add another dimension to the role the government plays in encouraging and bringing the unbanked to bank. India started that journey in around 2010, 2011. Only 36% of the India's population had bank accounts. And when you look at the data in 2018, we have close to 80%, 80% of people having bank accounts. And we still have 200 million people who don't have bank accounts, and we have work to do. It all, if you think about it, it is the stack which has worked in India, and it's called the India stack, and you'll read about it in many publications too. It started by the government saying, then all the subsidies from the government will be paid into an account, and hence you need to have an account. We are not going to give it through middlemen who were taking away quite a lot of money and not reaching to the right person as the subsidy, whether it was a crop subsidy, fertilizer subsidy, whatever else subsidies they were giving, unemployment subsidies to the poor in the rural India. So the government's decision that they will only do bank transfer prompted many of them to go and open an account, and that is what happened. But the bankers were not sure until you have an identity of the person as to whom are you giving the money to. And that's the time in 2011 we came up with the unified ID for Indians, and you had to have an Aadhaar card, which was your biometric profile on a card, and that was used to identify you. The third thing that happened is we did not go through banking correspondents and agents. We had experimented with it. It didn't work. But we said we will go through digital and on mobile. But then when you look at our infrastructure in India, it was 2G. Still it's 3G, more prominent than 4G. And we are talking about 5G, but we don't know when. So we wanted apps to be very thin, work on the infrastructure we have. At the same time, the unbanked were not going to buy smartphones. So how can it work on phones which are not very smart? How do you do two-way authentication on the phones which are not very smart phones? And the whole thing became the India stack. So you start with the government's will, which said, oh, guess what? We'll pay you online. B, you must have an identity, which was what government insisted. So now if you want money from the government for your subsidies, you need to do both. And then you have a mobile to go and use it. 1.1 billion Indians are coming into the banking system. Anika, I will end at one comment. when you look at microfinancing, when you look at non-banking financial institutions, their interest rates sometimes are between 24 to 36% per annum. But when you go into the banking system and then you look at what are the interest rates, they are very much less than 20%. It's between 12, 18, and so on. So now is the time for the banks to go and say, hey, here I have the liability accounts. How do I convert them into assets? How do I lend to these people? And AI is playing a very, very big role because now you have people who've been in the banking system for 7 years. You have their income history, their spend behavior, and you can then see, can I trust them to lend more? Do I give them what kind of schemes? What will get them to use the financial services?
Thank you for sharing that. Super interesting topic on AI, and we'll come back to that in just a minute. Since the theme of collaboration, though, is one that is really starting to come out, the role of government and the role of business as they work together. So maybe I'd love to hear from some of our financial services industry people we have today, Deepak and maybe Mike, a little bit about how do you incentivize financial services organizations to do the right thing, especially when the opportunity cost can be so great?
So I think governments across the globe, including Neelam, wonderfully illustrated how in India it has been rolled out. But at the end of it, as an industry, when you look at financial inclusion, it also has to fit with your business model. And I think that's what is more sustainable in my way of thinking. So I think the way we looked at this whole financial inclusion in Indian context beyond what the government and India's stack was, is to say there is a huge digital divide. And this digital divide is not just a phenomena in India, but I think it's across developing world. Those who understand technology and those who do not understand technology. I think a lot of financial inclusion today, because the cost to deliver the last mile was extremely expensive, even though financial institutions had intent to offer, they couldn't offer. Because you had to open branches, you had to put people, there's a cost to acquire, there's a cost to serve, and then you just realize that the viability of the model is just not there for you to go and serve the last person who needed to be brought into the face of financial service. So I think there are two approaches that we've taken, and we have seen this both working well. One, of course, those who are now on smartphone. But now think of a country of 1.3 billion where still only 600 million people have access to smartphone or data. So that is a base that is largely targeted through the low cost of acquisition, the low cost of service, and the low cost of transaction, largely all through the smartphone route. This is where we launched, in fact, one of the very successful digital bank product, which is now the largest in India. It's called 811. Largely, it was taken out from the day the demonetization happened in India, which was 8th of November. Because we believe that was the day, whatever happened as with the demon, I think the mindset of people changed. I think there was no option to use cash, and then people started to look at non-cash way to get into the financial service ecosystem. Launching a product and a platform which was digital first, not just helped us as an institution to probably acquire over 10 million new customers, but it also lowered the cost of offering financial service to these customers. So I think that was a transformational change. The second we would say is access to credit, because giving them a bank account is fine, but I think countries, and especially people down the line, they are credit hungry. Now, unfortunately, not everyone has a bureau record and a credit history, and you just can't lend because they have to go to money lenders, they have to borrow at some crazy rate like 4%, 5% interest month on month, or even more. I think what it has started to do is, as they started to transact now more digitally, they're able to build their transaction flows and lend against that in shorter tenure and credit cycles. So you can borrow now for 10 days, for 15 days. You don't need to borrow a loan now. They don't need credit cards, but they need access to credit at the point of consumption. So I think integrating the access and consumption point, that gives the data that where the money is getting used. The third thing we have seen is in all these countries, the citizens are underinsured. So if we start seeing access to financial service about basic health care, How do they cover in case if they are sick because they can't go to work? They don't have pension, they don't have health benefits, they are largely self-employed. So there are certain schemes that governments have taken, but we started to create what we call is a sachet product. So you can get an insurance for less than $5 for a year. And I think products like this starts to bring affordability of financial service. Similarly, you want to invest, you don't have lots of money, it's okay, you can just invest $2 per month. So I think when we start doing the sachet strategy, be it on investment, insurance, rendering it through digital, it again brings in the financial inclusion. Coming to my last part, which is those who are not part of digital divide yet, how do we still reach out? And I think that's where the traditional models will continue to work. What we do typically is microfinance business, only directed to women self-help groups. We do not offer this loan to men folks because the credit profile, their ability to repay, the strong community factor, I think all that is a very unique behavior that is again bringing access to financial service to those who do not have today access to financial service. And I think all these models put together, my take today, we have covered almost 200 million people in a country. And I think if these models continue to make commercial sense, I think more participants, be it banks, FinTechs, the other non-banking players, they will all jump into the fray to make actually financial inclusion real.
Yeah, if you look at it from an insurance point of view, you know, the responsibility of the insurer is really to use technology and collaboration to build products and services that is accessible to the customers in as cost-effective way as possible. You know, accessibility is the key word here, and when you start to sort of unpack that, it starts with government policy regulation. It really and utterly starts there primarily, and especially in the emerging market space. And if you look at the Indian example, that's where government takes control into their hands and say, well, this is what we're going to do and this is how we're going to do it. And it starts really there. Then you look at step number 2 for accessibility, and you look at mobile handsets. You know, so this is where the telcos come into play. And the more people have that's got access to these handsets, and then thirdly, network availability, Wi-Fi, all of this, all of a sudden, you start to see a picture unfolding where it becomes a reality to drive, whether it's banking or insurance services, to drive that. But more importantly, before you drive that is the education piece, and I think that there's not enough focus on that as well. The education piece, especially in the emerging market space, is one of the biggest gaps that's out there. You know, not only for you know, accessing products and services for the first time, but more so engagement. It's one thing to get people to use to open a bank account, but then it's another thing to make them use it. And so from an insurance point of view, you know, you're almost sitting there right in the middle of everything, and it's a responsibility of the insurers to build the capability, number one, and then the products that can fit into that almost hyper-local environments, and still, of course, make profit and build a sustainable business.
I agree from an insurance point of view, because when you look at insurance from the core, you want to reach a client, you want to understand the risk, you want to understand the problems and desires, and then want to propose solutions. And in the best case, you have that one in a very efficient manner. This is what insurance company looks for. So very in the core. The tricky part is that there are a few preconditions, especially when you want to serve in an inclusive way. First, to understand the risk, you have to have the proper data there. So very easy, very down to earth. If you want to build a credit risk, you want to build insurance risk, you want to have something like that. To reach the client in an efficient way, infrastructure has to be there. So we talked this morning in our office regarding Indonesia, regarding the ability to reach somebody with mobile interfaces on a small island. It's hard to tackle. It's simply hard to get anything there because it's not efficient to serve Indonesia with 270 million people or more, even more than that, or India with 1 billion people just with branches. Because the tricky part is, as you said, is the insurance business is still very advisory intense. So to explain to somebody what is a credit, what is a pension, why you have to save money is kind of hard. And last but not least, you want to build solutions, but insurance and in banking, it's largely also a contract. So you have to have a government infrastructure supporting these ones to drive them forward. We are gradually getting there, and this is a big responsibility of the insurance business to support that one, to emphasize these things. But largely we are tied to the ramp up of the governmental and society infrastructure behind that one's looking in India, looking in Indonesia, where we're working in.
So just to add to this point, I think, and we were talking about it earlier on, I think data has revolutionized everything we've done, and most of the data we use today has been kind of produced in the last 2 years. I do want to bring, however, a point to take a bit with a grain of salt, where AI and data analysis, and I see this at Sukalmal because we do a lot of analysis of customer behavior to understand their behavior from using a credit card to applying for a personal loan to getting insurance. What we have to remember is when we see results of any analysis of data, whether it's AI or not, what you put in is what you get out, right? So coming to your point from an insurance perspective anyway, we want to go out there and understand, the remote parts of Kenya or some of the African countries, how do we insure them from a micro-insurance perspective? But if you don't have the right data, you might not even know whether it's a profitable segment to get into.
Exactly. The big problem what you have is there, insurance, use artificial intelligence. Okay, you put data into that one, and you train a machine learning algorithm. This is what happens. If you only use data from your existing customer base, how can you serve somebody who won't have a microinsurance? Somebody who is actually not your customer base yet. So it's kind of hard to actually tackle that one. What we think is, at least for the microinsurances, for microcredits, is to leapfrog that one, to test things for more or less weekly credits or microinsurances, to generate data for the lower, the bottom of the pyramid, to actually be able to actually serve that one at a higher stake. But this simply takes time. And the tricky part is, especially the insurances and protections that are necessities. You cannot cover with that one. Health insurances, long-term protections, these are tricky to cover because you don't have that long-term relationship yet. And this is we have to go there, but it's simply
So I would just add to this. I think there's a very interesting thing that's happening in all the developing countries globally, is that the countries' emerging markets are becoming data rich before they are becoming economically rich. And I think the model is about how do we use this data to serve people. While if you see the advanced countries or developed countries, people are economically rich and now they are getting data. I think the whole model, the way we need to think, and that's where I think in a lot of countries, including India now, there is a huge debate about data privacy. Who owns the data? How's data shared? Are financial institutions just the custodian of data, or do they own the data? Because eventually this is an asset that every consumer has. And as we start transacting more and more, or we build this whole data ecosystem, I think that's an asset against which you can get access to maybe an insurance, a loan, a better credit underwriting. Because eventually you are pulling in risk in case of insurance. In case of credit, your rates are depending on people who may not pay. So I think as we are able to identify this risk better, not just access, but the pricing of the financial service will dramatically come down. And I think that has started to happen with especially the data privacy regulations that are coming in most countries, including very soon in India.
Yeah.
But I want to say one thing, Anika. When you look at data, it's not your own data only you're analyzing to form a full profile picture of the person. You're looking at other data, the credit rating companies, if the person is in there. You look at what they do when they bought maybe a tractor or a car or whatever vehicle they bought. Even it could be a two-wheeler. You're looking at multiple data sources, and then you're forming a profile of the person, and then deciding, okay, yes, this person is creditworthy, this person is not creditworthy.
And you don't always get it right. In Kenya, digital credit has exploded in the last few years, which has been a good thing and a bad thing, because debt stress has grown a lot. But the initial innovators who were using M-Pesa and mobile airtime use data to try to score people, they made some assumptions. And so airtime borrowing, which you may be familiar with, they said, oh, somebody who borrows airtime and can pay it back, that's a loan, right? And so if they do that, then that means they're a good credit risk. Actually, borrowing airtime is negatively correlated with your ability to repay a loan. And so you can start out with an idea about what the data is going to say, but you don't find out until actually you lend to people to whether or not it's going to work.
Yeah, so as someone who has a company that works for a company that deals in data, maybe Parry from Bloomberg.
Yeah, I was just going to add to what Deepak was saying. I think it's interesting, as we are a media company as well as we cover all of these stories, as well as we are, on the other hand, we are a data and financial information company. I think one of the most interesting things that Deepak just said was that data has kind of in some ways come first before some of the rules of data, of handling the data across most of the developing world. And I think we are seeing that both as a financial inclusion story as well as the biggest risks that technology brings. I think data privacy, I think it is one of the biggest challenges in big developing markets like India. I think while they're becoming markets, they're also becoming major risks to both privacy as well as to companies which are investing in some of these areas. So I think it's a combination of, in some ways it's a thin line, and in some ways the governments and regulation haven't been able to catch up quickly enough.
It is.
Sorry. So just to add on, Anika, I think when you're talking about the government and coming back to the question about the role of the government and all that, what's fascinating about all these discussions is the data privacy issue, right? In the Middle East, I have to have servers in every single country because the data has to sit physically, not on the cloud, but in the country. Fair enough. It costs a bit more, fine, we can deal with that. But the question for me is the Chubb and AXA, where we're a regional company, how do you, the big challenge for me, and that's why the role of the regulator comes in, is how do you allow efficiency where you can start sharing data analysis from different countries and apply a global view?
Absolutely. A very easy example. AI fairness and bias. A huge topic everywhere. What is fair, what is unfair? So when you look at an insurance, okay, not using, okay, let's go completely uncomfortable. Sexual preferences in insurance. You should not use that one. Everybody has a clear understanding of that one. So let's go into gender. Okay, you have a different life expectancy of men and women. Should it be part of the insurance AI model or not? Should be excluded? So the governments, the society has not a clear opinion on that one. There are some rules, but actually it depends really where you are. Age, the same thing. If you have a life insurance, you're 99, or you have a life insurance, you're 20, it's a different game. It is. So the question is, what is fair, what is unfair? Still, these things are an official debate, and when you're doing artificial intelligence, unfortunately, the poor data scientist who sits there has to decide that one because he has no guiding principle yet. So he tries to figure out, and you try to have internal rules and values and things to describe that one, but it's still something that is completely debatable, and it depends also on the cultural setting. Even if you're storing the data residency like in Egypt, like in Indonesia, locally, like in India nowadays as well. Still, the usage of the data is a very, very, very tricky topic that is not figured out, and we have to bring together with the governments this kind of discussion very much to the front line because it's still too artificial. How it really
I will just chip in. It's not much of an issue. Let me tell you why. Because this is a reality. All governments across the world will ensure that the data resides. If some governments have not done it today, believe me, tomorrow they will do it.
But can you keep the data somewhere else?
No, let me just come to, yeah, that's the point I'm coming to. But what you can still do, and a lot of companies are doing, you can still aggregate and anonymize the data if you want to use it for any of the data science and modeling perspective. So the residing of the data at an individual level, you cannot move out, but you can still drive the insight without taking all these, the individual data parameters outside the country. So those models are possible.
I think one country differs from the other. I'm sorry. So the data in one country is totally different than the others, and you have to work on the specifics of each country. But what about the consumer protections when it comes to the digital lending? Like you're saying that the breach of all with the phone access and all the consumer protection. So I think this is one of the most important roles, like we've issued the consumer protection law, and what actually can work or cannot work, or the responsible lending on Kenya's side. Like, for example, everybody is going to get defaulted because everyone is giving credit to the same person without having like a hub, and this is what we're trying to do in Egypt. We're trying to have the credit bureau of having a hub of the behavioral scoring as well, so we can have like monitor each and every single person taking the loan and not to duplicate the loans and not to get defaulted by end of the day. So
I just wanted to share a story which I showed. Data can play advantage and disadvantage. When we analyze data in India, first, it's about gender parity and disparity, which you mentioned, Ronald. We realized in 2011, 24% women had bank accounts. And when you look at 2018 data, we see 77% women have bank accounts, and that's India data for you. But what we also realized when we did the analysis, the credit rating for women is better. So if a woman borrows, she is more conscious of paying back. And hence, when the banks look at that data, they would like to lend to women more than they would to other businesses. And I'm just saying that analytics can help some bridge this disparity too.
So I think data is, and the power that data has, and the risk then when it can be used in the wrong way or interpreted in the wrong way is a massive risk in this area. And we were talking a little bit earlier just about the news overnight with the Apple credit card as an example, and the fact that it's not just a financial inclusion issue, but when data can be interpreted the wrong way, you get results that aren't equitable. Just maybe extending that topic just a little bit more, talking about what some of the risks are as we look at driving financial inclusion. I know, Dino, you had a specific example from Indonesia that we were talking about earlier.
Sure. Just before I start, I do want to caution sometimes our perspectives could be first world perspectives. So, for example, in Indonesia, there's a real problem with illegal fintech lending right now. Illegal fintech lenders, totally unregulated, they're charging up to 7% interest per day, so that's 300% interest per month. And what they do for collections is, once their app is on your phone, they scrape everything off your phone. Photos, contact lists. So then they'll start spamming your entire contact list, your family, your friends, with all sorts of egregious messages, compromising photos. I mean, these are criminal gangs, right? In Indonesia, there is no illegal fintech law. There is no law that makes illegal lending illegal. So some of these issues around what's fair and what's not, it really doesn't matter. In some countries, they have to get the real basic stuff in. And for Neelam and Mike's point, government is critical for this. They need basic legislation to make illegal lending criminal act. Right now, the Indonesian police are struggling to put these guys in jail. They have to get them through pornography laws or communication laws because there really isn't this law in place. So definitely the space for abuse is rife, and government plays a major part to taking this under control. And for us, sometimes we just need to be careful where some countries aren't even anywhere close to think about ethical issues. They just need to get basic things under control.
Yeah, I want to add to that because I come from South Africa as well, and that's a massive problem currently on the continent as well. But just coming back to sort of the data aspect as well, I think we tend to sort of go we go a little bit overboard with the whole data discussion because I tend to believe there's this a massive access to data, but what are we have we figured out what to do with the data, and are we using it properly, and then put that aside. What about just pure coming back to the basics of product market fit? So we have all this data, but again, and I think all of us in the financial services industry is guilty of that, is the products that's coming out currently, is it the most innovative product? Is it the right product? You still see a lot of sort of blockage of sort of new products that needs to hit the certain markets, and then outside of that, it's just on the ground knowledge, almost hyper-local knowledge, understanding outside of the data point, understanding the people and the culture and then building the business around that. And I think to your point about the data, you're sharing it. Yes, of course, you can share some of it and you can share knowledge around that. But I believe the hyperlocal approach is more important than ever. You've got to understand the country and the people and the groups and the target market you're dealing with, outside of purely the digitized data that's running on your screen. And if you get that right, and Peza is a great example of that, that's why they got it right, and that's why it possibly failed in the other places, because you cannot just copy and paste it if it works in one country or another. So
I think with that, one of the areas that we're working on in New Zealand, especially around data sovereignty, is what role does government play in supporting with regulation, but also what does it look like when government are no longer the intermediaries of data and information, and what happens when you give that back to the citizen. So I'm really enjoying the development of self-sovereign identity and the conversations around that, because consumers, and in particular Indigenous consumers in New Zealand, we haven't been given the opportunity to have the conversation of what does it look like if we start to reclaim our identity and our own information. And also, as consumers start to decide who and how are financial services needing to meet our hyperlocal contexts. So for example, generally I'd love to say we're a collective, but as a collective, how can financial services reflect the requirements of a collective, of a family? So we're asking questions around what would it look like if banks were able to have collective loans? So as a family, we could actually borrow together. As a community, we could decide together who will receive a loan within our community. And I really love the work that's been happening in India for a very long time around microfinance, because we've got a great deal to learn when community-based lending is enabled. But how can that be further muscled up with great tech? And so we're in a really, really interesting position at the moment, because a great deal of our tribal entities have now settled. It means that we've now got capital. And with capital comes power, and also negotiation power as well. And so, again, we're looking at banks who are not necessarily servicing our communities very well, and have also taken our population for granted, and therefore how might we use our collective purchasing power, our collective capabilities as savers, to actually start to drive a different narrative around financial services in our country. And I'm really interested to learn from your countries as to how you might be doing that too.
Again, I'm based in Singapore currently, but in South Africa they've got a initiative called Stokvel, which basically allows you as a group to save and to borrow. So whether it's a family or whether it's a group of friends, and it's super successful in that sense. So all of a sudden, you are by way of the collective, you are creating access, and more so is the education piece, because as a collective now they are interacting and educating each other about whether it's financial service products or the further use of it. So.
Yeah, in emerging markets, especially in Egypt, where we have this called ROSCA, which is the rotating assets and liability or savings and loan associations, where a small group of women actually gather to, it's called the Gam'iyya, where they actually save with each other, and then every time of the month someone take the money. And we've done a lot of initiatives on digitizing, even on the mobile money, this small groups of women on the bottom of the pyramid, just to help them through to get more access to finance, or to grow this small amount they're putting every month so they can actually have their own microfinances. So this is kind of, like you're saying, having the collective, and education is a very big part of it, because maybe they're not only financially illiterate, but they're also digital illiterate. So we need to work on the financial and digital literacy for those women actually to do the transactions.
I already said that in Kenya we have 83% formal financial inclusion, but we still have 63% of people using informal finance to complement the formal finance that they're using. And we've talked as a panel about the gender gap, and in Kenya that gender gap has shrunk from 13% to 6%. But if you include informal finance and the way that people use things in the collective, it's less than 1% gender gap. And that's because the women find that they get more use out of these informal financial services. And so finding ways to digitize those or to capture the performance of the informal financial sector in a digital way that then can inform the new products and solutions that are offered by the formal financial sector, I think is a big opportunity.
That's really interesting because I know we were talking about this the other night. When you look at the data globally, although we do see progress overall in closing the gap, women generally are lagging behind. So it's interesting that you talk about some of that access to the informal networks. And I know, Ambareen, we were also chatting just about some of the other reasons, some of the behavioral changes, social changes that may be driving some of that.
Yeah, I think, digital inclusion for financial services has completely exploded. Having said that, though, I think we still see a disparity between the two genders. And as much as I love the fact that talking about women, are much more credit-worthy based on the data that's come in and come back out than men are, I think there are a couple of reasons why you'll still see that women are kind of still lagging behind, and that there's a couple of reasons around this. One, in a lot of different countries, especially emerging countries, you still see culture as an aspect of, as a woman, can I even have a bank account? Until not long ago in the Middle East, as a woman, if I didn't have a job, I could not have a bank account under my name. So there's one of the areas, which is culturally, is it the man in the family or the woman in the family? From what I understand, in India, that has changed quite a bit, where the money is given to women versus men.
For the social security programs which the government runs, Jan programs as they're called, quite a few of them, the payments are made to the women of the family. So it's either the mother or the wife. She has to have an account and the money goes there. And we also have a concept of a family account. So it'll go and the money is in the name of the woman. So the subsidies, some of them go like that.
And I think the second point to make is women still, unfortunately, have less access to mobile phones. So there's around 184 million less women in the world who has versus men, and that's just access to technology. And even if they do have access to that technology, you'll see that the ease of getting the mobile internet and the usage of mobile internet for the purpose of financial services is lower than men. And again, education, which I completely agree with you, is a big part of it. And if I bring the question back to regulators, again, I think that's where one of the areas they should be working on is that gender gap. But number two is we've talked a lot about what we believe the regulators should do. But what we haven't talked about is what are they doing with the private sector? Because most of the innovation today is coming from companies like ourselves, smaller companies who do not have the Chubb or the access backing them up, which means regulation is literally the way to scale up your business. And what I've seen personally in the Middle East is the only reason the regulation has taken so long to get where it should be is we don't know what we don't know. So the regulators don't even know where to start to regulate FinTech companies or InsurTech companies. And I would love to reach out to the UN, to the World Economic Forum, and to come up with, here is a way you can do this, and here's how it's worked in India, in other emerging countries. Here is a template of the regulations, and now you can take this as a basis and localize it to your own. But that first seed, I think, is where a lot of the international organization can start taking on.
Yeah, so coming back to the regulation side, because we've done a lot of work for the gender gap, especially that introducing and endorsing more solutions specifically designed for the women, like, for example, the government disbursement or the subsidies. We've done it that the money for Egypt is going directly into the wallets. So because we know that women are time challenging, they're taking care of the house, they're taking care of the children and even the business, so they actually they have to have the service at their doorstep. So there are a lot of initiatives, but again, like you're saying, like the license thing or how the regulators are going, because you're talking about insurance or whenever you're saying that there's a lot of fintechs that are not licensing, and this is what we've discovered in Egypt, that it's for the fintechs, it just goes behind the jurisdictions of the central bank, because there's other regulatory authorities that actually taking care of the non-banking financial services, or the telecom operators are already under different authorities, and this is what we've done. We've done a memorandum of understanding for the fintechs to have a consolidated fintech license and policy, just to take care of one central unit to take care of all the fintechs and to guide them through a memorandum of understanding between the central bank, the AML unit, the anti-money laundering, the National Telecom Authority, and the Financial Regulatory Authority for the non-banking financial services. And this is how we come up with one consolidated approach to handle the licensing and the regulations for the fintechs.
I just wanted to add a different dimension to our conversation. When you look at the technology which has been deployed, we are talking about people who are not financially aware. They may not be digitally literate, and maybe they are not even very literate. So most of the time, it's not only also looking at the poor infrastructure and saying, I need to develop a tool which these people can use on the poor infrastructure of telco, but also how simple is it to use the tool. So when you look at the mobile apps which you are working on, for example, when I look at the ICICI Bank, the app has to be so simple. It has to have not more than 30 words in the whole app, and it is in multiple languages, because you're using more of pictures in the app than you're doing using anything else, so that even the illiterate can use it. And that's a really big task on how do you develop. And now the data also is going to be quite a bit of it, which is just clicks on the pictures which are there within the frameworks.
That's a great point, actually, and one that I would love again to hear from some of our business leaders a little bit more about, which when we think about some of these biases, when we think about some of these groups that are at risk of being left behind because of education, because of illiteracy, because of the infrastructure, what can businesses be doing as they think about how they design their solutions, or even how they think about the teams of people that they are putting together?
I think from business point of view, it's again coming back to that responsibility, number one, and then the deep collaboration and partnership, number two. I think the days are over where you can sort of run at a market in your own environment and with your own brand and try to acquire everything for yourself and keep your cards close. You've got to open up, and you've got to invest in the capability, almost the enablement capability that includes your product development. Because the matter of fact is, when it comes to customer engagement at ground level or at any level, in a lot of cases, they actually do not want to interact with us as the incumbents in any way, the bank or the insurer, right? Because they would rather interact with a new tech company or the tech platform out there, and there's almost like an element of trust where, in a sense, they almost trust the M-Pesa or the platform more than the bank, so or the insurer. And so, from big business point of view, is that enablement capability, number one, that puts you and I'm talking about technology, and I'm talking about the teams and people and the resources that you put in place. And then secondly, partnership. Partnership leads to deep collaboration, and it leads to possibly pressure in a good way back onto governments and the regulators where you need that change.
I fully agree. The tricky part, what we see, is you have to be local. You have to understand the local problems, what are actually there. And as you mentioned before, you have to rethink what kind of products you have, because it doesn't make sense to just reselling the stuff you actually know from the past. And you have to work together with local partners, being on site, seeing the local problems, working in close collaboration between the incumbents and the fintechs, and facing also the problems what you have per country together with the regulators. So it's a joint exercise you have to have. If you want to drive that alone, what you did in the past, it worked in the first wave quite well. It doesn't fly anymore, and it's not relevant anymore.
Also, I will just bring in one story from, again, India. What has started to emerge is largely the play of ecosystems. more of the points. So someone has access to customer or trust of the customer. Not all journeys need to start necessarily from financial service just because there is a lending, say, for example, involved. What started to happen is, especially in the villages, the rural part of India, the farmers, today, there is a lot of agrarian distress. At times because of the climatic condition, at times because of the soil. Today there is an agri-lending, which is one of the large portfolios that banks run, and we are one of those. Now today when you lend, say, for an asset which is a tractor, unless that tractor is used regularly, you do not really know whether that loan is going to be repaid. Now, asset to use, there is a data available, but the data is not available with the lender. That's available with the asset that's been funded. The condition of the soil and the weather, that data is sitting with somebody else. Now, there are models where people are able to put together this data to say, can I bring in the data of asset utilization, the weather, the crop, the soil, and then decide whether this loan is going to get repaid in a timely manner? Should you have someone as a co-borrower or a collateral? Because then your ability to manufacture a product or plug in into the ecosystem becomes very different than the way traditional financial services were rendered. So,
absolutely, Deepak. There's one example, just to illustrate that one. We founded a partnership with the European Space Agency to deliver health in Africa. So exactly what you mentioned. You're bringing data together from different purposes that are actually, at the first sight, not really linked to each other, because what you can do with that one, you see if the harvest is good in Africa or not, and you can see certain areas where you see, okay, here is a problem, and we work together with the WHO to solve these kind of problems. It's a very creative way, as you described, bringing data together, collaboration and partnerships between companies you never thought before that they have anything to do with each other.
Actually, if I could just do a general plug for startups, because big businesses, corporates are sometimes notorious for taking a long time to bring a product to market. And by the time it reaches market, it's something that nobody wants to use anyway. So what a startup really does best is we put the cheapest, lightest prototype into the market as fast as possible. And this is quite important in all our discussions about data, because some data is much better than others. But until you actually start using it, you're not entirely sure. There's a whole flow of e-commerce data which could be just fraudulent, fictitious transactions. But until you feel the pain of the NPLs creeping up, you wouldn't really realize it. And that's why I hope there's a lot more collaboration between large corporates and the faster, nimbler startups who can deliver product to market in a fraction of the time.
And if I may add to that pledge, as I have you guys on stage, going to you on that is, when we started 7 years ago, the governments wouldn't listen to us. We were too small. But the innovations were coming from companies like us, and the speed we move and the innovation we bring. But what actually kills us, as I said earlier on, was the regulation. So the partnership between the bigger companies who has an ear to the regulator consistently. It's only when we got now 7 years in that, yes, we have an open door to the regulators, but it took us a very long time to get there. So my pledge, similar to you, is I think the collaboration with the bigger companies to support us, fund us, to take us, therefore, much quicker to the regulators.
And this is actually, like I'm saying, the role of the regulator going beyond just merely putting the standard regulations. And this is what we've done recently in Egypt. Like we've also identified the local or the national problem statements that actually challenge that needs to be solved around the whole ecosystem. They're all gathered together in a round table with the investors, big companies, startups, and financial institutions and the regulators, all in sitting, putting the national strategy so that actually this collaborations happens across what actually needed to be solved inside the country.
Yeah, I'm going to do the plug as an entrepreneur. I think that we've been really lucky. I'm non-technical, but I've been on a 2-year journey, and I just want to head to my bro Brad, who's been doing some excellent work in Brazil in blockchain, because I didn't know anything about blockchain, and I've had to teach myself. I've had to teach myself jargon, and I've also had to teach myself how to work with a team of developers. And the reason why I did that was not because I wanted to get into the fintech space. It was actually because I wanted to address a particular need. And the need and the challenges that the banking system, the economic system is filled with wicked problems and in itself is inherently flawed. And I wanted to try and get to the root cause of the challenges. And so instead of continuing to play in the banking space, as Indigenous people, we will never be in a position to control the banking industry. So therefore, what would it look like if we actually started to develop our own currency? What would it look like if we started to own and control our own banking system like we used to? And so what does that look like, and how can technology enable us to do that? And so with that in mind, I've been really grateful that we've been lucky to have been lifted up by other big giants in New Zealand, Centrality being one, who's an established blockchain company that's given us an opportunity and invested in us. The government have also been very supportive in enabling us to influence government policy around digital identity and our trust network, our trust framework that's been developed as well. So we've been given lots of opportunities, and I'd like to say, yes, it's because I'm Māori, yes, it's because I'm a woman, but actually it's because I'm tenacious as hell, and I'm just not going to allow somebody to not enable me to participate or sit around the table because I'm non-technical, or because I'm a woman, or because I'm Māori. It's actually because I've got some really good thinking that could help solve some real problems on the ground, and I think that's really, really important.
There's something there, though, as well, as you talk about the focus and the push-up that you get from other big organisations. There's something around the story and the power of the story. And I think, Parry, there's maybe an interesting segue here to talk about the role of media. You know, if you think about how do you make sure that the focus is going in the right way, how do you make sure that stories like this are getting out there, that particular groups are not being forgotten?
Yeah, I think it's the biggest challenge if you're a media company to make sure that you're covering most of these kind of stories. I think it's always a choice. Quite often, the choice is between disaster and covering this. So I think at least for Bloomberg, we have been spending a lot of time trying to make sure we're covering stories slightly differently, trying to capture stories for inclusion, for instance, is a good example. We have a rule within the newsroom, for instance, where we do gender we get gender voices, gender in the newsroom, of course, but apart from that, voices within the stories and within pretty much anything we cover anywhere in the world. And of course, covering the different kinds of, smaller stories that usually you wouldn't cover, usually mainstream media wouldn't cover. We are mainstream media, but we would. But I think it's really in some ways an impetus to cover more wider and smaller stories from different parts of the world, which is both a challenge. I think it's an opportunity as well.
Thank you. Okay, so we are just about up with our time tonight. I just wanted to check if there was anyone from the audience who wanted to ask a live question. No one is feeling brave? Oh, there's a question here, if we can have a mic. Thank you for standing up and asking a question.
We see a lot of data analytics and AI getting applied on the organized data space. But on the unbanked, especially on the rural, are we seeing enough money getting plowed into looking at crop patterns, remote surveillance, understanding whether the crops have really grown? Because the last mile of cost of acquisition and servicing is really high there, and most of the surveys are done by sending people and deploying them on the ground. But are you seeing enough investment going into this area in the AI and pattern reading, or are we still far away from there?
So let me answer that from an IT company perspective. Both Microsoft and IBM have been working in India on the ground. Microsoft using sensors to see the quality of soil, pushing the data up from the satellite into their cloud, which is in India, then giving analytics including with weather. IBM, because they own the weather company is collecting data on behalf. They are adding the soil data by looking at it from the same satellite from which they look at data, and they are able to give predictions of what crops, what weather situation, what's the soil situation. And companies like Bajaj Finance, and since you are from India, you could make out, use that data to say, okay, which state can we lend this money to right now? All of it is on experimenting stage. It is not rolled out across the country.
I think we cover a lot of companies that are actually doing some of that kind of work. I mean, that kind of work is becoming valuable. I mean, even if you keep aside the social aspects of it, but they're actually becoming valuable for most companies who are investing in these parts of the world. So we think that that's actually a lot more work going on. And we've covered organizations that actually do a lot of those kind of data. It's less prevalent, but it is becoming more and more important, I think.
Yeah. Hi. Good afternoon. There was some talk earlier about Roscas and group lending. And has anybody tried to digitize? I mean, microfinance has worked great for 30 years. It's got high operating costs. That's the problem. Anybody have any experience digitizing that?
Yeah. So we run a microfinance company. In fact, we bought that microfinance company 3 years back and been running it quite successfully. One of the challenge in microfinance is the last mile use is still cash. Because as I mentioned earlier, this amount is disbursed to women, self-help group, and these are small amount where they pool in the risk and they also pool in the collection. Yes. So while there is a model where we can disperse this amount and we tried doing it, but again, the challenge in India, at least we found, is while we have these what we call micro ATMs, because you do not have the ATMs or the machine cash withdrawal points in these areas where we lend. So they have to still go and withdraw cash. Now, somehow the cost of deposit and cost of withdrawal, that commercial does not really work well. So technology can support, but the model in terms of the pricing of getting it electronically dispersed and then the end use is cash creates a challenge. But yes, if end-to-end the business can be run digitally, then it makes sense. So right now, both the disbursement and collection still happens through cash, but the data is collected and they are authenticated biometrically.
Sounds like you just need more wallet penetration.
Sorry.
You just need greater wallet penetration.
Okay. I'm really sorry. I need to cut us off. We have a very hard stop. So I wanted to first of all thank very much the people from the audience for asking questions. That was great. In particular, really wanted to thank this fantastic panel up here. There was 3 themes that I've taken away from this discussion today. One is around being hyper-local. I think that came up loud and clear when we thought about, what are the solutions that we need to be solving for. The second was around collaboration and the ecosystem that is needed. It's not just government, it's not just business, it's not just the entrepreneurs, it's not just media, it's all of these things coming together in a collaborative way. And the third thing is data. The power of data, but also the risks around data and the way that we need to think really carefully about how we use it. So thank you once again. It was a great discussion.